Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, July 22nd. It is 6 a.m. as I'm starting the video. As always, run that player at 1.25x for your highest efficiency. You won't miss a thing, I guarantee it. Let's take a quick look at futures. Equities are pretty much across the board up about 0.2. Oil and copper are both up 1%. Gold and silver have not been feeling it the past few days. We have been looking for gold to hold 1814, and we have slipped below that. In fact, I think we were trading 1797 on the futures contract here this morning. So gold and silver both have not really responded very well over the last few sessions. On the macro front, being Thursday, we got a lot going on. We got jobless claims. We've got both Chicago and Kansas City Fed out with some numbers. We've got a 10-year TIPS auction, the inflation protected auction, this afternoon at 1 o'clock. That'll always be kind of interesting to watch because that kind of sets inflation expectations. So we've got natural gas inventories, and we've also got a rather important ECB meeting scheduled here for this morning, where just like the Fed, they can move rates in the euro, which affects the dollar, blah blah blah, it has a ripple effect. So that may be something you either want to watch for directly, or just be aware this morning with the dollar and rates that the ECB is turning knobs over in Europe this morning. Wanted to point out a couple things. We are in earnings season, and if you like bracket trades, a bracket trade is where you get a gap up or a gap down driven off of earnings, where then you can bracket the price action after the move, and then obviously you'll have gaps. If it's a gap up, there'll be a gap below price, and if there's a gap down, there'll be a gap above price. And then as time moves along, you alarm that level, and then when price moves into the gap, you've got yourself a gap trade. Now, when I do my scan, I set the parameters like over $10 and over 500,000 shares in volume. I don't want to get 800 little tickers, $3 tickers. I'm not really worried about that. I'm looking for marquee names that have some volume. You could even jack that thing up to say $20 stocks. That would be fine as well. So for instance, last night, Texas Instruments reported they are set to be down $10 on the open. They were trading $195. They're trading $185 in the pre-market. So that would be one for you to watch today. And if you're Joe Trader, you can trade that live, today for, let's say it's overdone, and people decide to buy that up. Well, you got $10 of upside if you can play that opening range effectively, and maybe you get a $10 run today. I usually just let today settle, then box in the trading range, and then use it as second day plays for true bracket trades. So you can do that however you like. We do have some earnings today that I'm interested in. We've got Snap, Twitter, Intel after the market. Before the market, we've got Cleveland Cliffs, which is steel. We also got Nucor, which is steel. And we've got some airlines. We've got Alaska, American, and Southwest. And we've also got a home builder, D.R. Horton. So those will be ones this morning to kind of look at. I wanted to point out that Well, let's just get into it. I'll show this in a minute. Here's a U.S. dollar chart. We were down yesterday on the dollar, testing this downtrend support. Yields were up yesterday, so we had the plunge, and now we've had another bounce. And over the last 2 days, what have been the outperformers? Well, just going back to this chart, the outperformers have been scenario 2. The outperformers have been XLB, materials, XLE, energy, XLF, financials, XLI, industrials, IWM. Yesterday, IWM was up about 1.8%, and Qs were dogging it a lot of the day, ended up being up about 0.8%, and the same thing for SPY. So these scenarios are the scenarios that have been toggling. Falling rates favor tech and high valuation names like ARK and DocuSign and Roku and Zoom and all that kind of stuff. When rates are rising, it favors commodities, materials, financials, all the stuff here. So we've had 2 days of that. Now, 2 days don't make a trend, and there's certainly been a lot of whipsaws on these rotations where, just at the time you get in, they pull the rug and switch to the other regime. So we got to be careful here that we just don't abandon everything that's been working along the lines of mega cap tech and, pile into, travel names and stuff like that, even though they've done well over the last couple of days. But here's a line that I think is important. Uptrend on TLT. What does that mean? It means falling rates. We've had a lot of volatility the last 10 days. But if we come down, break this uptrend line, come down here till say 144 and lose the 50 on TLT, what would that mean? That would mean rates are rising. That will have meant we broke an uptrend line, and now we're on the, as far as TLT goes, we'd be on the wrong side of the chart if we were looking for a long. So on TLT, if we're looking for lower prices, that means we would be looking for higher rates. And if we're looking for higher rates, that's going to favor the cyclicals, that scenario 2 that I showed on the dollar chart. So for me, this is going to be an important line for, okay, which scenario is favored? Okay, so that's going to be my barometer. That's going to be my kind of a toggle point. And it doesn't have to be all or nothing. It doesn't have to be, okay, now we're out of everything tech and into everything cyclical. But you want to participate. If rates start rising, then you certainly want to be in some of those names and certainly have IWM on the radar, because that's going to be the one that's going to have the juice. So here are our breadth indicators. We've been watching this number of stocks above the 50 on the NYA 50R. We were at 35 yesterday. Now we're at 41. No big deal on an upward trajectory. That's what we want because we're long. Here's NYMO. We were down at minus 90. Now we're down at minus 16. But we're traveling north. And as long as we're traveling north, I want to stay long. If you have looked, back at history, a lot of reversals come towards the higher end of the range, 47, 40, 33, 20, 40. Here was a place where, if we got a big push today and we thought we were up in the 20s, we might want to, start thinking about peeling off a little bit of risk, especially if you went like massive in at minus 90. McClellan for NAMO, this is the NASDAQ one. So we went from minus 80 to minus 5, but on the northward trajectory, I still like being long. Equal weight SPY, nice technical event yesterday. Why? We recaptured all of the moving averages. If you zoom in there, we're above the 50, above the 8-day, above the 20, and now we're challenging this uptrend line and really quite close to actually breaking out of this trading range. And so that trading range is $6 wide on this index. You break above 152, that projects out to 158. I mean, that would be quite significant, because remember, in this index, Apple is the same as JP Morgan, is the same as any other S&P 500 stock. So this as an aggregate would be like a really important thing to keep an eye on, because that would indicate that the breadth is widening. We would see our NYA 50R graph that we just showed increasing, broadening out, that it wouldn't just be 5 stocks driving the market. So if we get a breakout here at 152, I think that would be huge. I mean, to come down at the bottom of the range and then break out of the top, I think that would be really, really powerful. SPY, another nice technical event. We recaptured the 20 and the 8-day. Now our overhead resistance is the bottom of this uptrend channel. You break into the 437.50 and a half right here and take out that prior high, recapture the trend, then we could be looking for a lot higher prices. Now, downside, I would be getting, just remember our tenets. Price above the 8 and 20 day, you want to be long. You want to be looking for higher prices. When you lose the 8, when you lose the 8-day, that's a red flag. When you lose the 20-day, you've got to become tactically defensive. Why? Because then you can flash down for another check of the 50. So these moving averages act as support and resistance and use them as such. So in your active trading management kind of scenario, when price is above the 8 and 21 day, you can feel good. You can feel more aggressive than you can when price drops below the 8 and 20, where you've got to be tactically defensive. All right, let's look at these pivots for today. SPY 2-hour, we're kind of right here in the middle. I would use 435 as a buy point. If you got to pull back into 433 that held at the midpoint of the channel and lateral support, I would be a buyer there with a tight stop below. So I think your key levels today are 435 and 433 on the 2-hour chart. If we drill down to the 30-minute chart, where we got a lot more resolution, I want you to pay attention to a couple little things here. 434.50 is a great line this morning. Why? Because if you look to the left for structure, you see that there's a relative void right here where the volume over price bars pull back. Not a lot of trading, relatively speaking, versus these areas. So you get a break above 434.50, you could see a fast $2 move up to this resistance level, which will be a lot harder because we've got a large volume over price bar here, and we've got these all this traffic and trading that happened near the highs. So that would be a tougher place for price to break through right here. But I think 434.50 is going to be a nice pivot for us this morning. Qs, just like SPY, we recaptured the 8 and 21 day. We've got PPO starting to curl and flatten out. We got RSI that, although it broke trend, which is nominally bearish, we didn't lose the 50, the midpoint line. So we managed to hold that. So those are always locations on those indicators that you want to be aware of. If we keep RSI above 50, that's going to keep price, on an upward trajectory. If this were to come up here and say back touch this and roll over, you'll see RSI lose 50, and then you got to be cautionary again. QQQ 2 hour, we got a little kind of in between right here. I think this 362 and a half area will be resistance this morning. If you get a breakout there, I would definitely be a buyer. We've got momentum that is put in a bull cross, and now what we want to see is momentum break above the zero line and continue on this upward trajectory. You can see that RSI has moved from bear zone to bull zone. We want to keep that path going, and just like I explained yesterday on our mantra, we want to stay long until the market forces us out and proves that we're wrong. I want to stay long and look for higher prices and look for places where we can roll up and take money to the bank and stay long. And so this morning here at this 362 and a half area would be a place where I would be a buyer. And I was looking at this thing yesterday. This is the 30-minute. I'm looking at myself and saying, is this a flag? Is that a bull flag? Big impulsive move off the floor, straight up. And that's what you want to see in a flagpole. Not, this isn't a flagpole. A 45-degree angle is not a flagpole. A flagpole is a vertical move over a short period of time with a consolidation. Now, so we went straight up. We did spend a little bit of time here. It wasn't that traditional flagpole look where, we went to the top and bottom of the range several times, but is this flag good enough for government work? And if it is, I put the projection over here, and that projection, that measured move target, takes us to all-time highs. Now, is that something I'm going to bet my life on? No. But it is something worth noting that, a lot of times these impulsive moves, they say bull flags fly at half staff. There's only so much energy behind it, then it consolidates, it builds more energy and breaks out. That final candle yesterday into the close was unbelievable. They did their best to shake out some longs between 245 and 330. Then they did a moonshot into the close, and that's this bar here where they did more in the final 30 minutes, actually in the final 15 minutes, than they had done most of the day. And so that was quite a powerful breakout there. So again, 362 here on the 30-minute chart. I did see a lot of order flow in the option chain on buying 362 for Friday yesterday in the option market. IWM moving right along. Here's that 2-day move that we talked about in outperformance as rates are rising. What I've done here is dropped in a midpoint of this consolidation range, and now we've got the 20 and the 50 overhead as resistance along with this midpoint line. So we're at a really important juncture on IWM. If it can break above the 50, I'd like to think that then you're going to get a flash move up to the top of the range, because these midpoint lines of a consolidation range often act as support and resistance. Here you see it acted as support, whereas back here there are some places where it acted as resistance. So if price can move above this resistance level and move above the 20 and move above the 50, then not a lot stopping it to go back up to the top of the range. And if that if the strong interest rate environment persists, maybe we get a breakout here and we get that 258 number that we were looking for back in here after a trip to the bottom of the range and then a breakout to the top of the range. So let's look at the 2-hour chart. Like I said, this is a very important spot on the chart, and we need to break out above 222, and then the next resistance level is the gold EMA here at 224. If it can take that out, then I see 225, and actually I see 233 down the road on a move from the bottom of the box. The range that we just looked at, this is the bottom and this is the top and this is the halfway point. So yeah, 222 is really important. And yesterday I was caught up in a frustration doom loop, and I want to share a little bit of that trade with you. I was all over this on the open, right? So I get my position, and I had all these lines, had it all worked out. I could see that 222 was really important. If you go down on a 5-minute chart, you'll just see a bump against 222, they'd sell it down, and just all day tapping 222, 222, 222, and then they'd knock it down 50 cents. So I'm watching this all day long, right? And we got to a point in the afternoon where it made a move above. It got up to like 222.15 or something. And I thought, like, okay, this is it. You're going to get the monster candle, right? And I added to my position, and then they knocked it down, right? It was a fake breakout. So now I'm sitting with an outsized position. And whenever you sit with an outsized position, you get nervous or more nervous. And it just added to the frustration level because price wasn't doing what I wanted it to do. And it ended up, at the end of the day, they made a fake move lower before the close. And then they, of course, ramped it back up to right where I was. So I had exited, I took back off the stuff that I added and kind of repositioned. But the point of the story is this. When you get oversized in a position, you lose objectivity. If I had just kept my position size the same as it was in the morning, nicely green, just sitting there, I should have been saying to myself, take as long as you want. I got all the time in the world. You want to break out now, you want to break out tomorrow morning, that's fine. Whatever you want to do. Just don't backtrack, right? Have your stop in place. But when I went max long, then all of a sudden I'm nervous and I'm anxious, and God, do I want to hold that overnight? Because if they knock it down overnight, that's going to really hurt. So be careful about that. I knew better and I did it anyways, and that's greed taking over for common sense. And I kind of knew it was wrong when I did it, but I did it anyway. It didn't end up hurting me, but it easily could have. So think about those position sizes when you're getting ready to do something stupid. Facebook. Nice day, guys. We had this yesterday. We had 344 as the pivot. It broke above, had a nice day. I'm looking for 348. I'm still long. Nice trade. Now today, if you're not in it, what you could do, and I'm not a strong proponent of this, but in certain cases, it's the only thing you can do, is you get a break above yesterday's close. You can get long, with a stop just below your entry and below yesterday's close, and then look for 348. If you don't want to do that, I don't blame you. Your next buy point will be a break above 348. If it goes above 348, look for 352. We've got earnings next week. Still like the name. I like my hope is FOMO gets involved. I hope the market stays constructive. I hope the Facebook FOMO crowd realizes that this move was just corrective action and now they're getting back on board. So I hope that things keep going in this direction. Now I'm in calls for Friday, so I'm not going to be able to just hang out forever. What I may do is if we get up to, I'll tell you, I am going to do this. If we get up to 348, I am going to roll up and I'm going to go out to next week and then hold up until earnings and then be sure I'm out before earnings reports. So that's my strategy there on Facebook. Apple, soggy day. I heard through the grapevine that Foxconn, some of their production facilities in China got flooded. I'm not plugged in on that news flow, but I was long Apple and I got out in the morning because it wasn't working. It wasn't working, and I kind of got stopped out. Nothing really wrong with the chart. But we are here in the middle of the range. And I think really to do anything monumentally significant, we got to break above 147.50. If you got to move into 144, I think you could buy that and then, look for a move back up to the top of the box. But this may be a case where Apple just runs out of time, with the bearish news flow about their production facilities and, maybe take some of the FOMO out. But if you got a break back above 147, then I think it would be really game on at that point, because that would open up 150 and even a move to the top of this box up at 155. It was just a shame yesterday that news flow knocked price down. But, keep an eye on it as I will to see if we can get a break above this 146.50 and then 147.50. But you can see that there's a lot of overhead resistance with the channel and with this 147.50 level. Tesla came down, bounced off the trend line. Same analysis above 655. You got 670 as your target. If you drop down below this trend line, I think just as a tactical move, you got to get out if you're long, and then look to regroup at 625. Earnings next week. So it's time for the FOMO bulls, if they're going to get involved. They're running out of time. So anyways, watch that. Microsoft had a decent day, 0.75%. I'm in this trade. We had 280 as our pivot. I bought that. We're up about halfway into this trading range. I'm looking for 283, 283 and a half. Anything above that is going to be great. So I'm in that trade. Hopefully we can keep it going and break above 282, which would be this halfway point. And then I think you would get that move up here. So that worked out really well yesterday. Amazon chopping. If you bought this 35.45 here or 35.50, that was great. You got a 20. You got looks like you got about a $30 move there, which was nice. But I think the real pivot is right here. If you got an entry down here, great. But if you get a break above this 35.90, then I think you're going to get a power move up, because there's a void here in trading, and you don't hit that big resistance until 36.40. So that's a $50 move. We're back to the free 50 club. So I like that trade. Earnings next week. You're going to need a FOMO push, but if you get it, watch out, because now we've broken the trend line. We've consolidated a little bit, and now get that breakout here at 35.90. I think you can look for a move $50 higher. Netflix reaction to earnings brought it back down here. I don't think there's much to do until you reclaim 515. If you reclaim that, I think you can get long there with earnings out of the way, and then look for a grind back higher. But you got to recapture this 515, or the door is open for lower prices. Google, nice day. Our pivot was here at 25.35. If you bought that, you're sitting pretty. You got a what'd you get? $20 move? Something like that. But anyhow, the next level is 25.60. If you break above that, I would be a buyer. I would be getting concerned if you lost yesterday's pivot at 25.35. But the trajectory is higher. And your next, if you're already long, your target is 25.60. If you break above, you can look for 25.75 to 25.80. Semiconductors is doing some nice work. Notice up almost 3%. We came down, we undercut this prior trading range, and now we've recovered the whole thing. And now our big level is 258, and that should ring a bell with you, because oops, I went the wrong way. I'm sorry. Here we go. 258 was our big trading range level. So now we came again. Look at this halfway level at 240. We got a big bounce. We recovered the 50. We recovered the 8. We recovered the 20. Now we're right here knocking on the door for another shot at a breakout. That would be, in my mind, very powerful. Could it break out again and then fail again? Sure, it happens all the time. But I'd rather have it be breaking out than getting rejected here at 258. So that has been a nice recovery. I guess I can apologize because we weren't, officially long on this recapture here, which would have been a really nice move. But if you're following along on the components, like AMD and NVIDIA and some of the other names, they've been doing really well. So hopefully you at least had something going on in the semis. Really nice trade. courtesy of Joseph yesterday. Pre-market, we had said, you know what, alarm 250 on Square and be ready to go. And that worked out so nice, up over 4%. If you caught that early, you made some really good money. And now we're up here at 260. And believe it or not, I still like this trade. Why? Because we're getting a high level bull cross here, and we came off of the 50 and we're moving higher in RSI. So I know we had a 4% move yesterday, but if you're not in the trade and you see a break above 260 right here, I think we could still find 270, 275, or at least something north of 260. I will tell you there was a lot of bullish order flow yesterday, looking 260s for Friday. So for those to pay, price has got to get up like 265 just to break even. So not saying do that trade, but it is saying there are bigger players looking for higher prices. So I really like that trade. And also, speaking of AMD, look on the AMD chart on your hourly and highlight 89.30, 89 spot 30. I have that as a support and resistance level. I plan to buy that if price breaks above. I think earnings are next week. I'm not sure. Check that. But I plan on buying that since semis have been strong, and I think you could see a move into the low 90s. I haven't given up on AMD. It's just been frustrating lately. So mark 89 spot 30 on AMD if you're interested in that. So let's wrap it up here. If you're new to the channel, subscribe, alarm. You'll get all the content. Jump over to the show notes, register for everything with an email address. A link is there, and then you get all my content. Longtime listeners, really appreciate your support. And I want to tell you, I've got some nice, heartfelt, personal notes from you guys, just on how well you're doing over the last, whatever period of time, whether it's just the last 2 days or the last 6 months, whatever. And that kind of stuff really motivates me because, I'm going to do what I do no matter what. But if I can help some people along the way, that makes doing this work and this videos all the better. So I'm glad you're doing well. If you get stuck or have a problem, you know how to contact me. My email is on the website. Join the trading room. We're all here to help. We all run into roadblocks and difficulties, myself included. So trading is a grind. It's not simple, even when others seemingly are printing money, and you're not. That could be a mental setup that is frustrating, and we've all been there. So if you get stuck in your trading, if you get stuck in your process, and you think I can help, I'll do my best. So anyways, thank you for those notes. I really appreciate it. And have a good day of trading, and I'll talk to you next time.